Welcome back. On today's short video, I wanted to do a quick recap on why I sold a stock with a ticker APP. The name of the company is AppLovin. I need to make a quick disclaimer that this is not financial advice. I'm not making a recommendation one way or the other. I'm just telling you what I did with a recent stock trade. So here is the company's information. AppLovin Corp. The current stock price is up here on the screen. It's trading somewhere north of $89. It's actually been up over almost 90 today. And if I look back at the 5-day history, you can see it's been up and then relatively flat. If we go back 1 month, you see the trend has been generally upward. If we go 3 months, it's been up, had a pretty good sized dip here early August, and then it came back up. And let's just go out to 1 year. You can see generally the stock has gone up fairly significantly. We were trading down in the 40s, 30s, and now we're up ticking almost to $90 a share. The day range today, you can see, has ranged from 87 to 89, almost $90. The 92-week range is 34 to 92, so we're sitting pretty close to the 52-week high. The reason I sold has very little to do with the stock itself or the company itself. I am not as proficient as I should be with this company. However, I do like the premise of making it easier to make apps, building a platform on which other people can generate apps, and then of course they monetize that and make a lot of money. So the reasons that went into me making a sale at this point are several. When I look through the company's key data, the market cap is fine. It's a good sized company. We're trading at the top end of the 52-week range. The PE ratio is sitting just south of 40, which in a high growth environment to me is not terrible. But here's what I didn't like. And some of it has to do with the company, some of it does not. In the particular account that this app was trading, or this stock was trading, AppLovin had become one of the larger positions in the portfolio. I want to say it was sitting somewhere around 40% because the stock has grown so significantly. That was strike one. I needed to rebalance the portfolio. Two, a lot of these tech companies, especially when they're trading with high PE ratios, when they're a newer company, they trade on basically consumer sentiment. And the overall consumer sentiment, you can actually see right here at the top of the MarketWatch website, there's a bulletin, U.S. consumer confidence notches a 6-month high. And it gives a little bit more information here in this article if you were to go there. That's strike two, because consumer sentiment is a big driver of stock price. If people think that the economy's doing well, that everything's moving forward, then they tend to think that stock prices are bulletproof and they push the prices higher. I don't like that from a hold standpoint. There's an old quote from Warren Buffett that most people probably know, and it's be fearful when others are greedy, be greedy when others are fearful. If a lot of people right now feel that they're invincible, that everything's going well, then they start pushing stock values higher and higher. If the sentiment changes, if there's something that changes big, then people are going to sell these type of stocks and go more towards the stable stocks or the consumer staple stocks. That was strike two. Strike three for me is looking at the insider trading activity within AppLovin. And you can see if this is on the NASDAQ website, it tells the consumer or the insider trading activity. You can see in the last 3 months, there have been 11 buys, there have been 26 sells. In the last 12 months, there's been 33 buys, 87 sells. So just rough numbers, it looks like 60% of the people within the company are selling, 30-ish% of the people inside the company that are making trades are buying. That gives me a little bit of a warning that people inside the company may think that the stock is at a higher valuation. Now, again, remember, I didn't sell my entire position in this stock. I probably took about 40% of the stock off the table. I still do like the company overall. I think it has a good story. When I look at the financials, I'm generally okay with the trends that I see within the financials. I haven't really looked to see if there's any red flags per se as closely as I normally would for this decision. This decision was made strictly on the momentum, the consumer sentiment, and insider trades, and a major portfolio rebalancing. So that's why I made a trade in the stock. I did sell yesterday. I want to say my trade was just over $90 a share. As it comes back down, I will review it and see if I want to buy any more. So again, not making any recommendations, just telling you what I did. If this type of content has been helpful to you, please give us a like. If you like this type of content, please do consider subscribing to the channel. And if you know someone who may be able to benefit from this, do share this video. Thanks for being here. We'll see you on the next one.